Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow. Day, December 30th, the penultimate day of the year. That's Dan Nathan. I'm Guy Adami, soon to be joined by the great Carter Worth. Before we get into markets and those types of things, last night on Fast Money, in the breaks, Jason Coleman, who works at CNBC, Amanda's familiar with Jason. I love Jason. Diminutive man, but very good looking, very good at what he does, was playing some music that Dan enjoyed. And one of the songs he was playing was In the Club.
In the Club. The Club.
That's what I said. In the Club by 50 Cent. And Dan said that he bought that on some sort of application for a ringtone.
20 years ago, before I had an iPhone in 2007, I have not had any other phone than an iPhone since 2007. Prior to that, it was probably one of the best phones that existed other than iPhone. It was the BlackBerry Pearl. Some of you guys will remember that. You couldn't do much on the phone other than text, and you could play Brick Breaker, which was something that people were absolutely addicted to, me included. Prior to that, I had a Razor, a Moto Razor, okay? And that, the one thing you could do in the singular, that's pre-T-Mobile, you could buy ringtones. And the one ringtone that I bought was In the Club by 50 Cent. Okay. So that was that.
Just hold on one second. So
yeah.
I'm just trying to understand.
Yeah.
So when somebody called you, like one of the bros called you wanted to get brewskis, when the phone rang, instead of ring, it would be
here. I just
In the Club.
I just put it back on. See that?
Now we will get into market stuff. I swear, I promise. But since you bought said ringtone, my instincts suggest when the phone would ring, if you were out with your fellas, you wouldn't pick it up right away because you'd want to show them
100%
that
100%.
By
the way, this guy still has a landline, which is embarrassing. I haven't had a landline in 10 years.
Yeah,
so actually, I misspoke. Singular was bought by AT&T, and T-Mobile bought Nextel. Do you remember and Sprint? T-Mobile is a roll-up of Sprint and Nextel. Nextel used to be like a walkie-talkie phone. People thought that was pretty cool. All right, Guy.
By the way, it's not Wednesday. And it's not Butters, because God knows where Butters is. Like, he hides in December. Yeah. Anyway, but yeah, penultimate day.
You call it the penultimate day, second to last day of the year. It seems like if you are buying letters on the Wheel of Fortune, you would not be using the term penultimate. Okay. You would just say, you know what? Second to last day of the year.
Yeah.
This has been a weird David Rosenberg. We just call
Rosie.
Yeah. He had a note out, a lot of great stuff yesterday, and we highlighted some of that.
Did.
He tonight or this morning, he said, all quiet. You know what I mean? Oh, he said the Santa Claus rally is petering out, Guy. It's petering out. Thoughts on the Santa Claus rally?
Well, look, I mean, I don't have a lot of thoughts. You know my view on those types of sell in May, go away, buy Rosh Hashanah, sell all those things everybody gets a kick out of. I mean, I'm not one of those people. But with that said, I mean, I don't want to say it's petering out. I don't think anything really is going on at all, unfortunately. I mean, we're still at 6,900 in the S&P. The all-time high was 6,945 a week or so ago. So it's not like we're cascading lower. We're just sort of in this holding pattern. There are a couple things that stick out to us. We've talked about them. We'll talk about them again today. I continue to sort of watch the bond market for any signs that something is happening. And before we get Carter real quick, if Amanda can throw up a TLT chart, because I want to draw that uptrend that's been in place since May of this year. You know, with each passing day that we go sideways, you know, that trend line is going to be once again attacked or challenged, or whatever word you want to use. And we find ourselves here in between the 200-day moving average, which is sloping lower, in this uptrend line. So over the next couple trading sessions or next couple of weeks, something's going to give here. And I think it's going to give to the downside. Obviously, other people think that it's going to rally and yields will go lower. We shall see. But here we are, Dan.
Yeah. So from a technical perspective, we'll have Carter kind of look at the 10-year and then obviously the 20-year ETF, which is your TLT. I guess the question I have for you, Guy, is at this point, okay, and I think it's interesting that the president teased again, the next Fed chair, but he rushed to do it, which is kind of weird. You know what I mean? You'd think that it would be to his benefit to get that person's name out there, you know what I mean? And have a good sense of like what that, person is likely to kind of think about as it relates to, rates and the like here. But like I look at that and I don't know what the impetus would be for the 10-year to rally right here, guy. You know what I'm saying? Like from a fundamental standpoint or from a news flow standpoint or whatever, because it's been stuck in the mud, right? And it really just can't get out of its own way. So again, I'm just curious, like in Q1, and we know I think the next Fed meeting is what, the 30th or something, and maybe we're going to start to get some real data as it relates to jobs and inflation and wage growth and manufacturing and all the things that we hold near and dear to our hearts as it relates to macro data. But like what would be the thing that you think would cause a break above that moving average, which is also that resistance level 20, and really get people thinking, okay, this thing is back on its horse, back towards 450.
Fair. I think that's the right question. So what would get the TLT to rally? What would get rates to go lower? And I think the answer to that is not who the next Fed chair is going to be, he or she, although right now it appears there are only men in the running. I think what it's going to come down to is how much do we deteriorate on the macro front? How much does the job market start to waver? And I think that, to me, if you get this unemployment rate that starts to continue to tick higher, for the bond market to rally and yields go lower. So yields will go lower for the wrong reasons, in my opinion. But we'll see. I think the flip side of that coin is, this continued global debt problem, this continued potential for this de-dollarization that I think at some point manifests itself in the bond market. We've talked about these stable coins. And just to quickly answer not answer your question, but to address what you said about naming somebody, I think he enjoys the theater about it. I think he enjoys letting people sort of hang out in the wind and waiting to whenever to announce things. I do think there's a theatrical component of this. I'm not agreeing with whether it should be or not, but I think that's definitely part of it.
Yeah, well, it's also at odds with what he'd like the central bank to do, right? So like for whatever that's worth. But really quickly on the data front, Guy, Torsten Slok from Apollo had his daily spark out this morning, and I think it's important to acknowledge some of this data. I think he puts it out there, and it's not meant to be, he's not really taking a side. I think holistically, he uses a lot of these sorts of data points, as inputs to his broader. But let's throw that up. I mean, he's talking about wages growing faster than consumer prices. When discussing affordability, it's important to note that while the CPI price level has increased 26% since 2019, wages have increased 30%. And then you see this now, they're kind of leveling off. And I think you and I could make the argument, or many people would make the argument, it's fine that, you've seen wages increase over. I think there's different cohorts, right? Like where those wages have gone higher. Immigration has something to do with that. But even the CPI stuck where it is, that really can be, an adverse sort of situation for many, many different consumers. And I'll just say this, I was out, with some folks last night, some mid-20s people who are, in the workforce on their own. And then my daughters who are in college, and, one of my daughters she doesn't shop at Whole Foods anymore. She shops at Trader Joe's. And she says that most of her groceries are up, she said double, year over year. That's not the case, obviously, but it feels like double. That's the thing. You remember the vibe session, that Kyla Scanlon was talking about a few years ago? When it feels that way to you, it causes you to do things in response to that. And then these 20-somethings, this is supposedly a thing, Guy. They don't go to Sweet Green or Cava or any of these places anymore because the bowls are $18. and they call them food preps. They bring food from home. You know what I mean? So these are just like, I know it's anecdotal, but I hear this. I was at lunch in Dallas last week with two of my friends who are successful people. They're in their mid 50s, and they are talking about how everything is expensive. Like when you start hearing people like us talking about that, can you just imagine what it means for younger people, lower earners, that sort of thing?
100%. I mean, we've been talking about this for years. You don't tell people how they feel. That's a mistake that the prior administration made, and that's a mistake that this administration, I think, is making as well. And people feel a certain way, and whatever you say, it's just going to make it actually worse. And inflation is still a problem. Now, Torsten's work is interesting. I would not have thought that'd be the case, but what's the breakdown of the wage growth? My sense, it's probably pretty much happening on the higher end of the spectrum, and that's dragging the entire thing up, because for the middle and the lower end of the spectrum, I don't think you're necessarily seeing a commensurate wage growth against the inflation problem that everybody's feeling. So, again, it comes down to this. You can make numbers look, and I'm not suggesting he's doing this, but you can make them look however you want to make them look to sort of back up and defend your thesis on things. And I'm as guilty of it as anybody. But I just look at the entire thing and I say this: inflation is still a problem. For the majority of the people out there, things are still hurting. And, that inflation at some point is going to manifest itself in the bond market. I continue to think that.
Yep. All right. Well, we surrounded that trade. All right.
I haven't been to Sweet Green, by the way.
Well, real quickly, pull up the stocks, SGCAVA, which is obviously a good ticker for if you are Sweet Green or Kava. I mean, these stocks have gotten decimated. If you look at Shake Shack, decimated. It is interesting. Look at that. Look at a 5-year basis. I mean, this is saying something about, $18 salad bowls. And pull up Kava. There was another one. What was the other one?
Well, CMG is going to look like that. All these, it's the other side of growth, right? I mean, on the growth spec, when things are growing, nobody looks at valuations. And when things stop and then comps start to sort of level off and go the other way, the first thing people look at is valuation. And here we are. I'll tell you quickly about Sweet Green. We're getting down to levels, if you want to pull that chart back up again, getting to levels where you actually might want to look at this from a trade on the long side. You can see longer term, we're at levels that we saw in the spring of 2023 effectively. So this should be a level that we could potentially bounce from. And if you think about this, we could bounce, we could double from here, fill in that gap that was created over the summer, and still be a broken company or a broken stock. But this is one that I think might be interesting on the long side over, you probably got to give it a month and a half, but at least you have something to trade against on the downside.
This company is not supposed to be profitable until past 2030. I mean,
Georgetown boys, I think it was boys started this thing, by the way.
Yeah, I mean the revenues are growing. Let's say at 10% ish. Earnings just a disaster. I mean, these companies will probably, like private equity or someone's gonna have to buy them, rework them, or something like that. They're just not. And Jacob just put in there, they call it bowl slop. I heard that yesterday. Also, all right, let's
call it bowl slop.
Yeah. Well, I'll just say this. Yesterday when I left the office, my daughter and my wife wanted me to pick up Kava for them. It was $38 for 2 bowls. Now they'll eat them for 2 meals, just to be clear on that. But in there, and this is one of these places that I wish I'd never went in there to pick up the food, but I did. The 2 guys putting the slop in the bowl had these crazy freaking beards, and one of them had a net on it. I'm not sure the nets help these gross hairs fall into the bowls.
I love that.
I will tell you. So there were 2 guys. One guy didn't have a freaking net on his beard. Okay. So one guy's beard, he's worried about shit falling into the bowls. The other guy's like, fuck it. You know what I mean? Like, and I will never eat Kava ever again in my life.
And as opposed to listen, I'm not saying this, but you think it's any different at the fine dining institutions that we go to? I mean, it's the same thing. I mean,
you know what? I don't go back in the kitchen, and that's
what you don't know can't hurt you. You've seen me. I mean, I eat stuff off the floor. I mean, you've witnessed that dozens of times.
I know, but I have a different sort of sensibility about all this stuff. All right, Carter Braxton Worth. I am so sorry, Carter. You've been sitting back there. You've been listening to the market slop that's come out of
Carter, man.
There he is. Not at all. I was thinking about, I loved my razor flip phone. You pulled up the antenna It was so sort of like
No,
Dick
that was
Tracy
your
stuff, right? Real sci-fi. And
that
if you
was
think
your
about it, I think the
StarTAC.
first one they laughed about the first ones, right? It was that brick
Yeah.
that came out in probably the 83,
Motorola.
84, because it was in the movie Wall Street, right?
Yeah.
It was featured. This was come a long way since then, but I don't know. They're not that much better.
Carter, I want to be clear on something. You're talking about the StarTAC, which was a very cool phone that came out in the 90s. That was like the hottest thing, maybe on like 96.
What did I have? I had one that was gray, and you flipped it, and you put
That
up a
was the
little
Razor,
antenna.
but there was no antenna.
That's a Razor.
There was no antenna.
Yeah.
That is literally, and I still have one of mine. That is one of the hottest. It was one of the hottest phones ever.
Yeah, it was great.
I had this.
Let me ask you a quick question about those antennas. There was a piece of plastic that you just, that's complete bullshit, right? I mean, that antenna.
Yeah, this makes you feel good. It's
Well,
like, right.
That was the StarTAC. I mean, people also forget Nokia and Motorola. Nokia was one of the largest market cap companies in the world.
Yeah.
Nokia and Motorola had maybe 2/3 of the market share for cell phones. I want to say, this is prior to the iPhone. I mean, it's just a BlackBerry.
Well, think about BlackBerry, right? Most valuable company in Canada, and biggest, and all is flux.
But this is important. A lot of people will say, such and such is the global crossing or the WorldCom or the Enron of this year. The fact, if you have no sense of history, and Carter, like, I know that you looked at the technicals guy, you are historic as far as your time in the markets here, but some of the biggest names, the most talked about names, the most popular names, whether it's in retail, whether it's institutions, whether it's Wall Street, they go to zero. It happens. Like Carter,
I mean, there are these stats where 98% of all publicly traded equities underperform T-bills on a long-term basis, or the other way to look at it, 90% of all the value ever created in the S&P is about 5, 6, 7 companies. I mean, it does beg the question, buyer beware. If you have a great thing, you keep it to yourself, right? The Mars family's not going public, right? And a lot of these, Bechtel or whatever it might be, or it's only when you need to maybe unload something that you unload it to the unsuspecting public through the venues of Wall Street.
Guy, what is one stock that you can think of over the course of your career, or like a handful? I mean, this is like really fun actually, but like that, it was just the zeitgeist. It was like the like Enron is obviously one of them. No one back in 2000 or late 90s.
Sun Microsystems, everybody talked. JDS Uniphase was a huge one.
Yeah.
Right. I mean, that was JDSU. Everybody talked about that.
People didn't even know what JDSU did. Like, just didn't know. I mean, like, didn't know. It did not matter. It's just amazing. I don't know. Carter, are there baskets of stocks right now that if you could bet against that people are really geeked up about, you would do in a heartbeat? I know you could do these like, ETFs or, you could structure your own.
Sure. I mean, if one were to say, what are the most immediately speculative or embraced areas of the market, whether that's good or bad, holding no judgment on that, and then going with your question, what would one maybe say, hey, to bet against, going against the tide, being contrarian? Obviously, one of the most speculative areas is the precious metals. It's platinum, it's palladium, it's silver, it's gold, and all things related. Another, of course, would be idiosyncratic tech. Not all tech is doing well, but largely sort of highly, highly growth-oriented, but also high valuation stocks. Let's take a Palantir, right, or anything like that. Or could it be a Tesla, right? It depends on how you want to look at it. But that's the other area that one might want to say, hey, look, this is come too far. I want to be contrarian. The other side of that is to obviously say energy at 3% of the S&P versus a much bigger part of GDP and a bigger part of total employment and global activity. One could be contrarian and say this left for dead, thought forever gone and no longer valuable area, sort of subsoil resources, is something to be contrarian and embrace. There's always, contrarian investing does work, but it takes patience, and it's also a bit ego prone because you're saying to oneself, I think I'm smarter than the facts as they stand, because the facts are the facts. Something's prospering and going up, It's generally doing it for a reason. If something's lagging and underperforming, it's generally doing that for a reason. And so contrarian, it can be very profitable, but also treacherous.
You had a prescient note out over the weekend, and understanding that for a lot of your clients, they can navigate, they can get in and out of things, they can short things. For most of the people watching here, shorting anything, let alone a commodity, is going to be very difficult. With that said, the silver chart yesterday, we saw something that we probably haven't seen in quite some time. You had one of these engulfing patterns where the prior high, the high was higher than the prior day's high, low lower than the prior day's low. I mean, and the range was extraordinary. I think we traded up to 82 or something in silver, and you see where we closed. My question to you isn't necessarily how to trade it. Is it over, or is there a place to get back in?
Yeah, I mean, holding that aside, what we were trying to spend some time on Friday, and that was the initial note, and then again on Sunday, was looking at the circumstance of when silver, and gold too, of course, has gone up on a day-to-day, week-over-week, month-over-month basis to such an extent that the gold-silver relationship is plunging, right? Gold divided by silver, how many ounces of silver 1 ounce of gold buys. So in April, just to put that in context, and this ultimately gets around to making the case that silver is likely to not be a good bet going forward. But in April, just for instance, 1 ounce of gold buy you 107 ounces of silver. Right now, 1 ounce of gold buys you about 60 ounces of silver. The long-term average, going back to 1974 when gold and silver futures trading began, is about a ratio of 60, right? 1 ounce of gold buying you 60 ounces of silver. So we're right at the long-term average. What we found, though, is that when the gold-silver ratio has plunged as it has, because gold has gone up less than silver, so the gold-silver ratio going down, that every single time silver has underperformed gold from this point. And so, yeah, so here, if you look at those, maybe spend some time, this is probably worth a second or two. This is an all data chart of the gold silver ratio. So it's one thing divided by another. And those little A, B, C, D things that you can see, those are all circumstances similar to the one that's farthest to the right that you can see now, where the actual ratio was sort of 35-40% below the 150-day moving average, the pink line. And then there's just a general simple weekly price oscillator on the bottom. Now, those other 13 instances, I don't know if we have any tables here. If we do, great. If we don't, but you'll see that what happens, look at this. So this is 3 months later, when the current circumstance, you see current, and the other ones that were similar, gold and silver performance, but silver is much worse than gold. And the differential, you see there wasn't one exception. A gold outperforms silver or silver underperforms gold. Look at 6 months, we might have all of these. But I mean, these are just facts, right? This is not my opinion. I didn't manipulate this to make it feel good, to try to prove a case. I don't have a case to prove. I'm just trying to make judgments based on facts. So 6 months later, silver was down every single time. 9 months, and one can say, yeah, but this is different this time. This can be like the Hunt brothers time, and so forth. But I just wouldn't make that bet. My hunch is to pull back. Remember, silver is a very small asset, right, to gold. It's always the beta trade. It's very speculative, and it seems to be the epicenter of what is generally a very speculative moment for precious metals, because we know that palladium is up, and platinum is up, and gold, and so forth. And so by this measure, by these data points, and by the chart that leads the report, it would make a case for basically either exiting your silver or hedging aggressively.
Yeah. Tough one. I mean, I said this on Fast Money. I didn't mean to be glib last night. I just think that, and you kind of speak to this sort of stuff all the time. And I have to give Guy a lot of credit, because there was a large part of 23 and 24 where you were saying enough people, too many people are not paying attention to what's going on in gold, right? And then all of a sudden, when people start paying attention to it, it's probably the time as an investor, if you came late to the party, to probably pay less attention to it. That's just my 2 cents. And rarely do I have people come up to me, whether the people are know or don't know, and ask me about gold. And again, I didn't mean to be glib about it. You have a lot of technical views on it. You don't care what the underlying is. Guy has strong fundamental views and a whole host of inputs that people should be paying attention to if they do care about it. And you have decades of experience looking at it. I don't have any, so I just don't have anything interesting to add. But Carter, I just want to go back on one thing, and I know you have a couple names, individual names you want to focus on, and I think, let's do that. But you just said something about, being contrarian and looking at some of these highly valued, So I just want to read through. I'm looking at my main fact set screen here. Okay. And you talked about Palantir. Palantir is up 142% this year. It was up 400% last year. And I'm going to look down. I'm just going to look at things that are up over 100%. There's plenty, AMD's up 80%, Intel's up 90%, Micron's up 250%. This is on the year. Western Digital's up 300%. STX is up. This is Seagate up 230. SanDisk, which was taken public again, came out of private equity, is up 300% or something like that. I mean, the list goes on. Lam Research up 150, Celestica up to 250. These Applied Digital is a data center company up 225. Iron up 300. Nebius, which is a Neo Cloud, is up 200. CoreWeave's up 100. I mean, the list goes on here. And these quantum names. I mean, when you see this sort of stuff, and this is almost 2 years on, I mean, it can continue to go. There's no doubt about it. I mean, NVIDIA did this for 2 years, and now it's only up 40% of the year. You know what I mean? And obviously it's a law of large numbers. I mean, isn't this the sort of things that warning bells are screaming in silence? And I'm not telling you I'm bearish on the markets or anything like that in general, but this sort of price act, we've seen this before. It just cannot end well.
Well, how to say it? I mean, the first thing you said is the most accurate, meaning the most we can pin down is that they can always keep going, right? And that the momentum is a powerful force, both positive momentum and negative momentum. There's stocks that just go in unrelenting downturns, like a Target, where you just cannot believe it. Is it cheap now? Is it cheap now? And then they slip below the surface without a trace, and the water goes still. That's called bankruptcy, right? That's Eastman Kodak and Polaroid and Enron and so forth. So momentum is a very important and powerful force, and it can always go farther than one can ever believe. But to the second point that you made is, can it ultimately, or have we seen it before? Yes. At some point, and this is why people use, instead of 1 year, people use a Cape-Shiller, PE, or they do a blended average of a 3 to 5 year growth rate and try to put a discount on future cash flow. It's all very gray at that point. And one thing we know is that growth can abruptly stop, and it doesn't matter what it is. And when it does, the money that has embraced it aggressively abandons it aggressively, right? And so those massive drops and gaps on a slight earnings miss are when people are willing to sell at any price to get out, because they were in for a reason. As long as they were beating and guiding higher and raising and really are showing operating momentum, once that's over, they exit. The reason that is because as long as the numbers are miraculous, you can assign a miraculous or therefore hard to pin down multiple, right? You can always say, well, it could be this athlete. Look how his rookie year was. We can't. So, and they overpay for the next contract or for a great actor. The next role isn't that good. When the thing is hot, 2 years into a big nightclub, and then someone buys it, and then 4 years later, it's an empty room. And so there's a peak moment. It's not when the earnings are peak. It's before that, when the dream is at the peak. And so could one make the case that that's the circumstance now? That ultimately is the case that someone just, if we put a fourth screen up here and put Warren Buffett on, he would say, whether it's 8 months out or 18, I know, he might say, if he doesn't speak with that kind of certitude because he's humble and properly so, he would say it's highly likely that these will not be higher looking out 2 and 3 and 5 years. And that's right.
Sorry, one of these battleground stocks has been Palantir, and our rudimentary work, and Amanda will throw up a chart. We're looking at this and say, there's the makings of a head and shoulders. You could see the first shoulder back in August. You could see the head in November, and now you see this other shoulder. So we had Dan Ives last night. Dan thinks much differently on this one. He thinks this is going to be trillion-dollar company at some point in the relatively near future. I am not one of those people, but just technically looking at this, understanding that really you only know after the fact if it is, but just eyeballing it now, this has the makings of a head and shoulders. And if in fact it comes to fruition, you start doing a measured move, what does it look like to you?
Yeah, I mean, the question again, the first objective always is to remove the name and the four symbols of
Right.
the three. So the black screen, the white up and down vertical lines, the yellow line. It's a stock, or is it a commodity? Is a housing chart? Is it a GDP chart? It's something that's in an uptrend. Now the question is the recent behavior a little bit off, a little bit sketchy, perhaps suggesting something's changing? It hasn't made a new high. Yes. Would weakness from here start to suggest that something is more than just a little bit off, maybe getting worse? It's all of that. But that's, that's a judgment I don't think one can make, other than it's always fun to do it, right? You see a lot of things online where they draw lines that project the future that are just not projectable. Of course, one could put the head and shoulders top in there and say, that's what's coming. It's what I would look for, and the key is volume. A heavy volume move to and below sort of 172, 171. That would, and a gap down to that level, that would be much more definitive that the recent stall. Remember, this stock is the same price it was in August. The market's a lot higher than it was in August. The QQQs are a lot higher than they were in August, right? Biotech is higher, and airlines are higher. You pick your story, but the relative performance is poor, and the risk, and that's what you're implying, Guy, is that this is developing into a sort of discernible and important topping formation. And I would say that's certainly a possibility. I myself, if I were wrong, this, and the purest way to answer is, if you can't wire a stock into someone's account, you can ACAT a stock from one account of your own to another. But if you were to put this into my own account, I would immediately sell the 200 calls for January, and I'd probably cut the position by 15%.
Yeah. To our eye, I know that you do a lot of technical work. I mean, I think the most important point there is it's trading at the exact same spot as it was in August. And just throw up NVIDIA for a second here, because I think, obviously these are, the Palantir's market cap is 10% of that, but their revenues are like low single digits. You know what I mean? Like I think NVIDIA's revenue in a day is, well, whatever. You get my point. This thing, it looks the same to me. I would almost rather buy NVIDIA, sell Palantir here, because I just think that right now, NVIDIA, a step down in their growth in both earnings and sales and margins, is being priced in, at least from a valuation standpoint. Now that changes if they go down significantly, but like Palantir is the one that just makes absolutely no sense. All right, Carter, let's go to something that's less sexy, but looks a lot more attractive, especially as we get into the new year. I don't know if you are a subscriber. I know that you and I and Guy have been doing this for many, many years. Do you buy into the things that have underperformed, and into the new year? I know you just
that's a tough one. I mean, Dow, dogs the Dow, and remember that's a yield play, right? The stocks with the highest dividend yield, implying that they've been down, because if nothing's changed, stock is down, the dividend payouts the same, yield is higher. But look, United Healthcare is a controversial thing, right? It's one of the great growth stocks of all time, handily trouncing things from McDonald's to Coke to, Home Depot. You pick some of the great brands, and it has had a real comeuppance, of course, this past 12 months, dropping from 650 to 250, and not doing it casually with massive drops and gaps on heavy volume. But what I see is something that is and has put in a bottom and is working its way higher. So one way to draw the line, very simple, would be to connect the series of higher lows since the plunge low and what would be presumptively the all-time low for this cycle of July, August. Next iteration would be to put in play, have we moved above the downtrend line effectively in since the high? I think that's the case as well. Put those two together and you get this sort of thing, a resolution out of this triangle, if you will, converging trend lines. And then another way to iterate it would be that there's something of the makings of, but again, this is projecting further. These lines, that's saying that's cup and handle. It's such a weakish current formation. You need much more strength to validate these lines that I've drawn, but I'm trying to make a case here in multiple ways. And then finally, and the most important, of course, is that the smoothing mechanism, the 150-day moving average, is now flat, right? The definition of a prospective bearish to bullish reversal. I'm a buyer. That's the green arrow, of course. And I think it's one of those situations where if you're wrong, it's a waste of time. It goes to 350, 380, back to 340, 360, and doesn't reward. Or if you're right, it's 450, 500. I don't think the third scenario, that this plunges from here, is a high probability. So without knowing who can, I would say, and we'd all agree, can only do three things: every stock, every currency, up, down, or sideways. To my eye, sideways and up of the three scenarios captures 90% of the odds.
Yeah, and I agree with you on this. And I'll say, we have not seen, there's been a like this sort of blackout period in terms of bad news in the space. I don't think we've gotten one of these negative headlines since late summer, early fall. And with each passing day that you don't get one, you're going to start to have a valuation reset. And I think that's what we're seeing here. And I look at this, Carter, real quick, and I say there's going to be a reconciliation of the moves that we saw. You go back to the spring when you had these line jobs to the downside, and this could be a $450 stock, and effectively nothing's changed other than the price of the stock. So I'm with you on this one.
No opinion here, not something. I mean, I like what you're laying out on the technical front. I don't have a fundamental view, but I could be convinced, and maybe this is one guy. Next week we look at a potential options trade to kind of do it with defined risk, playing for something that maybe looks, to your point, guy, maybe 400 or 450 in that range. Carter, last thing. You had a note on Home Depot, and I love the phraseology that you used in there. It is a member of the XHB, the ETF that tracks. It's the home builder ETF, but obviously there's a lot of retail and related sort of stuff in there. That has come down 120 to where it is right now, 104, and it was at 52-week highs this early September. And the Home Depot, just run us through what you're seeing here, because this is one where I know that guy in particular has been someone to say he's a seller on rallies. The thing has not, as you say, acted well.
Yeah, so of the 30 Dow stocks, if you think about it, I think 5 or 6 are down in the year, and of those, 2 of them are home and housing related: Sherwin-Williams and Home Depot. So obviously the epic thing here is how poor the relative performance. Think about this. On the year, a major stock like this, that's just not just like not keeping up. Well, we were up 10, the S&P was up 17. I mean, this is bad, right? There's no way around that. Okay, look at the 2-year. Look at the 3-year. Think of that. Look at the 5-year and so forth. So the recent divergence is an issue. There's the 10. But I think the most important circumstance, if we look at the long-term charts here, if we look at the next iteration, this is one of the great winners. I mean, it was at the financial crisis low, there were stocks like Citibank that were thought to be prospectively going out of business, stocks like this. And so this stock has gone from 17 to 439. Now that's a 2,500% gain. The S&P is up 900. I mean, a big banging winner. But the question is, we were here in 21, and now we're here again in 24. We've broken trend. You can see that here. Last iteration on this long-term chart. That's bad action. And so I think, heading into the new year, here are 2 major Dow stocks. For instance, I'd be short Home Depot and I'd be long UNH. But look at the here and now chart of UNH. I mean, that's bad. Look at the next iteration, those drops and gaps. The next one shows the vertical line. I mean, recent bearish price volume correlation. Those lows are very precise. That's the tariff low, the recent low. I think we break. And so, it's the definition of things not desirable: bearish price volume correlation, poor relative strength, and a marquee name in the stock market that's just in a bad space right now: housing.
We've been pretty consistent on this. You go back to December 2024, I think the stock made an all-time high. We had a sell-off. Then you go back to basically September of this year. We traded up to and failed at that prior high. We've obviously had a very dramatic, precipitous sell-off. I mean, I think the first level of support for me, Dan, is probably the June of 2024 low, which is like 325. I think May, June of 2024. And then we'll see what happens. But Carter's spot on. There's a break in trend here, and there's some macro concerns around it. So you see the lines that he's drew in the circles. That's where I think we're going.
Yeah, it is a pretty amazing. If you look at like that 20-year log, was it 20-year that you used, Carter, from the
20 year. You can go back and look at it.
That resistance level is as clear as mud, and is that's clear as day, clear as mud would be. If you're
not a good setup. I mean,
Yeah,
you
if
know,
you're trying to be
stranger
snarky.
things have happened. And maybe it's the biggest winner next year, but the facts as they stand are negative.
Yeah. Not good. Carter Braxton Worth, listen, just people. If you need great charts, you need a Sherpa, you need a technical analyst who's a sure you go to worthcharting.com. Think about it. I mean, this is like the holiday season. Give a subscription to your favorite market prognosticator, you know, this sort of thing. Guy, what do you say about worthcharting.com?
It's nothing slick. It's just charts, baby.
Yeah, baby.
Right.
Carter, we really appreciate all your contributions this
Happy
year.
New Year, guys.
Thank you so
All the
much.
best.
We appreciate
Bye.
it, man.
Love Carter.
We
The
love
hair.
it.
Put that picture back up because look at the hair on this guy. I mean, it's just unbelievable.
His work is amazing, and you and I have had the benefit. A lot of our listeners, our viewers, have also on CNBC, and he's just giving you a little bit of taste of that sort of stuff. So, it is what it is. Hey, Guy, you've been working really hard this year. Our team has worked really hard this year. Maybe we take a couple days off. You think that's in the cards here? Maybe.
You know, I think given the lack of volatility in the market, given where we are in the holiday season, given the fact that tomorrow's New Year's Eve, unless something changes dramatically, I think that's a good idea.
Yeah, so follow our newsletter, our Substack, because Cece, Amanda, Timmy, and Jacob, and even Bill has a hand in the Substack. I'm just saying that for whatever. He doesn't. But, you know, if for any reason we decide to go live on something or are going to push out some special sort of thing, if you're on that riskversal.substack.com, you'll get our daily newsletters, but you also get updates about programming and the like. So go follow that, please. Guy's dialing on his for whatever reason his home phone.
Because I want your phone to ring and I want you to play in the club for everybody.
Hold on. How do I do that?
I don't know. You're the one that.
Hold on, Guy. Do it again. Just do it again.
I'm doing it. I mean, the gag. We lost the gag.
We did
but
lose.
I'll try it again. Hold on.
You do that. So here's a gag that Guy does before every fast money. Can you hear that? I guess you can't. So the gag didn't really work. But we tried it. Guy, so we're gonna take tomorrow and Friday off. We're dropping a mailbag risk reversal podcast. You and I are going to record that right now. It's going to be in your favorite podcast store. So go follow us. Also, if you want a free book from our friend Oz Perlman, he is the mentalist. He just wrote Read Your Mind. He was on our podcast that dropped on Christmas Day. He is the man, the myth, the legend. Go look at some of the stuff that he does. Liz Thomas was on with me on that podcast. He blew our minds on a couple of tricks there. So you want a free book? Go to the podcast store, leave a review for Risk Reversal Podcast, take a screenshot of it, send it to Amanda at contact@Risk Reversal, and we will send you a copy of that book. But when you get that book and you read it on Amazon, leave a review. Leave a review on Goodreads. That helps our main man Oz. So go do that. That's fun, Guy. I know that you're in the middle of the book. It's a great.
You know how you know that? Because you read the book.
Yes. And he'll read your mind. Bill was very cynical as he was in here looking at some of the tricks that he did. Liz and I were just blown away. So go check that out. Get a free book. Leave the reviews on the Risk Reversal Podcast. Leave the reviews for Amazon and Goodreads. Enjoy the book.
Enjoy the book. I'm going to read the book. But if you're a mentalist, you don't need to read the book, as it turns out. So,
Guy, he did a number on you on Fast Money. I want to say a year and a half ago, 2 years ago. Like you were blown away.
No, it's insane. I'm not dismissing what he does is absolutely insane. I don't know. Go to YouTube and watch the clips he does at NFL training camps. And some of the guys walk out of the room because they think he's like, black magic, and they're freaked out by it. So.
But then there's things like this. I had dinner with him a couple weeks ago, and he looked at the waiter and he said, is the chicken parm better than the chicken piccata? You know what I mean? I'm like, how do you not know what, you know what I mean? Like what, obviously it's the parm, you know what I mean? Like, and I'm not even a freaking mentalist, like, I don't know. I was surprised by that.
Listen,
right.
everybody, thanks for being with us this year. We will be back in the new year, which is faster than you realize. And we're going to
Jan
drop
5. That's a Monday.
Jan
We got
5
some
is Monday.
really exciting things that we're fired up about in the new year. We are going to do a segment each week that maybe turns into a podcast with the Wall Street skinny ladies. They are awesome at what they do. They've been on our podcast before. We're going to call it He Said, She Said. We're going to dig into a theme or a topic that they're really interested in each week, and we come at them about it, and they come at us about something that we're interested in. We're going to pick some things apart. We're not going to agree on everything, guy. We're not going to agree on everything. So He Said, She Said with the Wall Street skinny. We got a couple other things in the hopper. So to a huge 2026, guy.
Hopper, by the way, the sheriff in Stranger Things, the show that Dan said was the worst show that he ever saw. I think you said that last night.
It's so cheesy. It's so contrived, and it's just kind of dumb. And these kids are like 25, and they're meant to be like 16.
Yeah, it's like Happy Days.
Steve was one of the breakout stars, in my opinion. And from what I hear, one of our friends is his agent. They were meant to kill him off after the first season, but
they couldn't do it. Steve is the man.
He's the man. And he's also the lead singer in a band that my wife has gone with our friend Lindsay to see. That was earlier this year. That must have been cool with them seeing a bunch of 50-year-old ladies checking out Steve and his band, after the show and everything like that. I make fun of them for that, but he's a rock star. The guy's he's a great actor. He's fun.
They warmed up PK Fire.
Oh, geez, that's the Arcade Fire, and that's the LCD sound system, and it's the OK Computer. You just put it all together. Isn't that what you do? It's what you do. And you know what's so funny about you? Really quickly. So I was on with our good friend Max Myers this morning. Okay. What was the name of the documentary? So Guy and I, one of our great partners, iConnections. Okay. It was a premiere of this movie. It was a documentary. What was it called? Really quickly, The Age of Disclosure. And you and I and Rich Versal, we helped sponsor that premiere. It was on the Intrepid. This is like the real deal. It's not some like schlocky little thing put together. It's on Amazon. And in this documentary, people like Marco Rubio, Kirsten Gillibrand, and ex-CIA head, like all of these people are interviewed on the record talking about the existence of aliens and how our government has hit. And for some reason, I haven't seen it yet. You haven't seen it yet. It's supposedly amazing. Like there's a lot of these things where these online sleuths are doing this, and that's been going on for 100 years. This thing is supposedly the real deal. And you got to go watch it. I'm going to watch it tonight.
There's an object apparently that NASA or one of the agencies has been monitoring that's doing things that a normal asteroid or meteor could not do. Speeding up different, I guess, what's the word I'm looking for? Different paths across different planets, leaving a tail that is physically impossible unless it was somehow made by, man-made or some extraterrestrial. I encourage you folks to take a look at this, because we are not alone.
Is that in the documentary?
No, that's been being documented. Hold on, I will find it for you today in the New York Post.
It was in the New York Post. Well, it must be.
The New York Post is everybody reads the New York Post.
What do you think would happen to the stock market?
If the New York Post went away?
If there was acknowledgement, if there was proof of aliens.
There is proof. I mean, Brian Kelly and I talk about it all the time. They are out there.
What do you think the best performing stock in the stock market, if it literally
Lockheed Martin?
Well, SpaceX would be like worth like $50 trillion in the you know what I mean? Because everyone would want to get
what would perform best?
Water. Well, not. I mean, listen. Yeah, I know you're a huge fan of the ET and the Close Encounters and the Star Wars and all those sorts of things. You've been prepping for this moment for what, 50 years or something like that?
I think about it. just mathematically, the size of the universe and then all the different galaxies that are out there, it's mathematically impossible for us to be the only intelligent species in the universe or in the galaxies or in all the galaxies that are out there, of all the universes. It's just impossible.
Yeah,
We
the
live,
one
I
thing,
believe, in the Milky Way. I think that's the galaxy that we reside in.
yeah, I mean, all fair. I never took physics, so I don't know anything about this stuff. But you think about just like the societal breakdown that we would have. Like it would be like religion, every religion would be called in question, right? There'll be new religions that would pop up. There'd be some of the craziest shit that's been in all these movies and these TV shows. It would all happen. And like if you think about it, most everything that's been in a sci-fi movie over the last 50 years has actually come to pass, right? So the idea that aliens wouldn't exist is like kind of silly. The one thing I'll just say, and I think this documentary I think addresses this, is that if aliens were coming here and they were just like looking, like checking stuff out, they're like, we come in peace, that sort of thing, great, it'd be fun. But there's got to be a set of aliens that would not come here in peace, right?
Maybe we're the aliens. You ever think of that? It's the 3i / Atlas. That's the
yeah.
that's
So
the media or whatever.
There's a movie that is coming to Netflix, I think in March. It's called Hail Mary. It's with my favorite Ryan out there, not Ryan Reynolds, not that was Ryan Gosling is in it. It's called Hail Mary. And it's one of these movies, just there's no spoiler alert. I mean, the first trailer left a lot to the imagination. He's going to save the world. We saw Armageddon, all that. So I love Armageddon, by the way, one of my favorite movies of all time. And they just kind of tease to the fact that Ryan Gosling's character comes in contact with an alien. The second trailer is literally, it'd be like E.T. leading with the alien. You know what I mean?
Yeah.
Or something like that.
Yeah.
And they just gave it all away. They gave it all away. And Cece's here. By the way, I didn't give Cece a shout out. Cece is writing. He's writing our newsletter with us. He's doing an amazing job.
Hopefully Richard Dreyfuss is in that movie as well.
Dude, did this guy put this in? Oh, this was on Twitter. Oh my God. Jeez, put this up. This is probably guys. This is guys. This is your what do they call it? Your burner
My
Twitter.
burner account.
Let's put this up. This is Cullen Swamp Trash Crawford at Hello Cullen. Just throw this up. I mean, I don't even want to read it. It's just
me and my friends would have killed ET with hammers. I can tell you that much, my man. I mean, you see that freaky thing? I mean, I don't give a shit how cute he is.
Is this your burner Twitter account right here?
Oh no, I don't have a mustache. It looks more like Jacob than me.
Yeah. Jacob lost his mustache. He doesn't use it anymore.
They're out there. I mean, they're absolutely, listen, I'm just telling you now. They are out there. They walk amongst us.
Yeah. The age of what was it called? The age of disclosure. I'm watching it tonight, and you and I maybe we'll do a review on Monday on Jan 5.
Yeah. I'm down with that.
All right. Well, it's been fun. Cece, Bill, Jacob, Timmy, Amanda, who's doing fine, by the way. Guy who's had to put up with me, and I've had to put up with Guy.
Go for some brewskis tonight after the show.
After Fast Money. And then you and I are going to be on a New Year's Eve too. We just happen to be around. I'm not usually around here, but New Year's Eve, that'll be fun.
It's an interesting show to do. It's not easy to get into Times Square on New Year's Eve, as you can imagine.
Last night was a zoo. Like, are these people waiting for like the ball drop already?
Tomorrow, people will, and it's going to be cold tomorrow. People will start to wait around 11 a.m. And then you get put in these. Basically, you get put in kennels. I mean, there's no other way to describe it.
How do you go to the bathroom? How do you go to the bathroom?
Once you're in, you're not allowed to leave. If you leave, you can't get back in. People wear diapers.
Seems insane.
Can't bring an umbrella. And it's rained before.
What are you,
so it's
what
just
are
a miserable experience.
Ball drop? That's all.
There are forms of entertainment. You're amongst whatever, but
they're all the entertainment is actually on TV.
I understand. I ain't feeling it. But
what do you make of these during football games? And I know I know you're a huge Bradley Cooper fan for multiple
I
reasons.
love Bradley
Not
Cooper.
just his looks, but he's a
No,
Georgetown.
I love Brad Cooper. Is it yes, Georgetown? I
Okay.
just love the guy.
What do you make of these Uber Eats commercials? Like, if it wasn't him, you'd hate them. He's talking about football.
I hate them. Period. And
it upsets
me. It upsets me that he somehow. I mean, hopefully they're paying him a lot of money, but it upsets me that he allowed himself to get dragged down into that rabbit hole.
Allowed himself. He probably writes them. You know what I mean? Like he's all in on it, which should make you think twice about, we're still our group chat is still on the bathrooms in the Times Square. You know,
imagine how gross. But there if you leave to go to the bathroom, you can't go back to where you were. So no, there are no bathrooms. There are no porta potties. None of this. I'm telling you, I've been there. I've seen it. I've witnessed it. I've walked amongst the crowd. I don't understand it.
Do you think there are people who've done that? Gone to Times Square once, done it, watched it, who go back and say, I got to do that again.
100%.
Are you kidding me?
They're the same people that go to Disney World.
You know, I've only been once in my life to Disney World.
Happiest place on earth, which every time I see a video, it doesn't look all that fucking happy to me.
You know what? You want to hear? This is really funny. So my brother and I, our families went, Syracuse was playing Ohio State in the Hall of Fame Bowl. And I'd never been to Disney. And my parents, we all went, my sisters, my parents, and then another family, good friends of ours, and who were from Syracuse. We went down there. So we were probably like 18 or 19. And my brother, me, and Mark, our friend Mark Pasquale, I'm doxing Mark. And we went to Disney. We had no interest in the ride. So it's supposedly there's this area called Epcot, and they have this bars of the world where literally they have all these different beers and stuff like from each part of the world. And we just went in there one day, and I think we just went through Europe. Like we literally crushed it and and that was our like full day at Disney. And I think we probably barfed on Space Mountain or something like that. So I've never been back. We never took our kids there. Are we horrible people? My parents never took us. Did you go as a kid?
Went to Disney World. I believe it opened in 1972, if memory serves.
You were 9 years old when it opened.
I was 8 or 9 years old when it opened, and we went. Yeah,
it's the American dream, man.
My favorite ride is Mr. Toad's Wild Ride, which apparently is not there anymore.
Did you go more
than
once? Did you go more than once?
Yeah, I've been to many, many times.
Really?
I was there back in the day where you had A, B, C, D, and E tickets, and you know, the good tickets were like, I don't know, let's just call it the C ticket. And that was Jungle Cruise. That was the scary one, the Haunted Mansion, a bunch of really cool things. And you had to leave one out. And then the shitty tickets for like, if you wanted to go on a fucking merry-go-round.
Jacob wants to know if Walt Disney greeted CNBC's Fast Money. Were you on like a VIP list? You know what I mean? Like, yeah. All right.
Well, whatever. Now you get people getting eaten by alligators in the fucking water there. I mean, it's
insane, right? Supposedly people die there all the time.
No doubt.
So some guy literally was decapitated on Space Mountain earlier this year, and they had that bitch up and running like within 3 hours. Do you know that?
Was guy amazed as a kid when Lincoln animatronic booted up?
Oh my God.
All Presidents is great. That's my favorite one because all the presidents
have the most
Lincoln speaks.
They have the most.
I'm sure that I haven't been in a while. I'm sure they have to.
Yeah.
But Lincoln speaks, Washington speaks, and they announce each president. They do a spotlight on the president. He moves, gets up out of his seat.
Is this thing still on? Is this just us talking or no?
No, we're still on. We haven't said goodbye yet.
Really? Oh, I thought this was just us.
No.
Sorry about that, people.
I will say goodbye to the people, and then we have to do something else.
Yeah, we got to tape the mailbag, and that's going to be much tighter, people. That will drop tomorrow morning in your favorite podcast store.
It'll only be tighter.
So rate it, review it, share it with friends. That's how people find it.
Discovery, we call that. See you later.
Bye.